Okay, guys. Just come on. I'll do that. Yes. Yeah. Okay. Um. Welcome to tonight's class, and we we will continue to build from where we actually stopped uh, in our previous class. That was the second episode teaching for the market business model. Okay, and there has been there's been a lot of teaching, although I've not really gone very deep into teaching as much as would would be considered as enough. But um, that is the thing about learning. When you're learning, you do not rush it. You do not you're not hurrying. You're not in a rush. You're building your knowledge gradually. Okay, that's why we call it the knowledge base. When you're trying to build something, you start from the base. You start from the bottom and you build it up. You understand? Because by the time you try to build a house and you're starting with the roofing or the walls and you've not set a strong foundation, um, you might eventually build a house, but the house will not be able to stand the test of time. You understand? So as traders, we want to make sure that in our accumulation of knowledge, we accumulate it um, chronologically. Okay, we do not rush it step by step, one after the other, and eventually you're going to see that um, even though you spent a while, or you spent, let's say, about 2, 3, 4 months gathering this knowledge, by the end of you gathering the whole knowledge, it's going to eventually give you an enviable result. Do you understand? So that's the thing about being a trader in this market. You are hold on. Okay. Yeah. So as I was saying, you build yourself up little by little, gradually. Okay? You run away from anything that would cause you to be in a haste. Over the course of history, we've seen people who try to hurry system, people who try to hurry rush process. They do not like the results that it presents to them at the end of it. So that's the thing about the class that you are currently in now. There is no need to rush. We are not in a haste. Okay. Now, yesterday I spoke to you. I spoke to you and I said stuff about the fact that this forex market is a compendium of infinite possibilities, and I also said there is nothing you want to get here that there is no principle that guides it. As long as there is a desire for something in this market, there is a principle, there is an instruction, there is a guidance on how to get it. So you not having results does not mean that the possibility of that result is not existing. What it just means is that you do not have the requisite amount of knowledge or the guidance that is needed for you to achieve that result. So I spoke about that yesterday, and I also explained to us, the economic fundamentals, which are the government, central, and I told us that there are lots of sectors, lots of sectors. I see that majority of you missed that part. Okay, so there are lots of sectors that makes up an economy, and I said, but our own focus would be three. And the reason why I talked about three was because the government and the central banks would help us understand the market, which will be our primary focus, our major focus for the whole of this teaching, because that's the reason why we are here. Now, the thing is that there is really nothing, if you have researched, if you're a very good researcher, you'll see that majority of these things are still basic knowledge. Okay, there's really nothing big in it. It's still basic knowledge. You understand? Like I said, we would start from scratch. Okay, so the market, these are the things that helps you build knowledge, that helps you build understanding rather, for what you are going to be learning. So there is no introduction of foreign. Everything I've been saying since the beginning of the class are things that if you research a lot, you would definitely have come across it and you would understand it. You understand? Yeah, we've not really gone deep into teaching. In fact, I can just tell you that we've not started teaching the market business model proper. Okay, these are just foundational knowledge to help you build understanding for the concept. Okay, now one thing I as a trader is that one thing I do not believe is that how do I put it now? I do not believe that all other body of information, okay, all other body of information in this market, I do not believe that they don't have their role. Yeah, I know every single one have its role, but I believe that the challenge is that since there is no proper arrangement of this knowledge, we do not know what is responsible for what. Okay, and this is the reason why majority of traders would assume that as long as they are good with risk management, they will make profit. But the truth is, risk management is good, is important. Okay, the knowledge of risk management is very, very good, but it is not risk management that will give you profit. Risk management only helps, help protect your capital for long term, but it doesn't mean that it's going to give you profit. The profit that you desire in this market comes from the combination of your analysis skill and your trading skill. Those are the two things that gives you an edge in this market. Okay, so the market business model does not just give you the knowledge that you need about the market, because I can actually tell you that, oh, this is a blue candle, this is a bullish candle, this is a bullish candle, this is a bearish candle, and everybody knows that. I can tell you that, oh, when price drops from this high to this low, this is a sell trend. Yeah, everybody knows that. That is the knowledge. It's a generic knowledge. Okay, there are some things about this market that everybody knows. It's there. It's generic. It's obvious. Okay, there is no need to gallivant around it. It's clear as day. But then the thing about the market business model now is that it helps you know what exactly to apply in order to get what you want. Now, this means that as much as this candle is bullish, yeah, and you wish to know if the next candle is going to be bullish or not, the market business model would help you. It will give you the body of knowledge that you need to engage. Okay, and by the time you engage it, you'll be able to determine what will happen in the next candle. So it is beyond you just having the knowledge. It is also you knowing how to apply this knowledge and also getting desired results. That's why by the time we go very deep into this class, you begin to realize that majority of the time when you are being told that some things are random, actually it is not that they are random. It's just that they need a certain level of knowledge for you to be able to control them. I would usually say that I do not take trades beyond the amount I want to trade. I want to take in a week. If I wish to take 50 trades in a week, I know how to, and I don't just take those trades based on the desire to achieve a certain number. No, I take those trades based on understanding of how they present themselves and I engage them. What I'm trying to say is that let's assume that I wish to take 50 trades. So let's represent this box as 50 trades. Now, I won't just start stacking positions inside just to make it 50 trades. No. What I would do is that I'll go to the market, and you see, for let's imagine that this box here is 50 trades, and inside of these are smaller boxes that represent small trade, let's say one trades each. So that means that inside this box now we're going to have 50 trades, 50 boxes, right? So inside this major box we'll have 50 smaller boxes. That means one box represents one single trade. Now, at the end of the day, when you analyze or when you go through my trading results, you could see that I entered these 50 trades just because of that is what I want to achieve for the whole week. Okay, but then let me draw another box, and this box would also have 50. We'll still have smaller boxes inside, and each of these smaller boxes would represent also one trade. So we'll have 50 smaller boxes inside this major box here. Now, you can actually research or analyze each of the boxes which represent a single trade, and now see that yes, even though I took 50 trades, I did not trade them randomly or just because of there is a desire to take 50 trades. There were some certain settings, there were some certain parameters that I followed, there were some certain instructions, body of knowledge, engagement that I put in place at the beginning of the week that now starts generating trades for me, so that at the end of the week, by the time I'm done at the end of the week, which is on Friday, I have 50 trades, not because of I desire it, but because of it's not just because of I desire it, but it's also part of the fact that my desire pushed me to set it in such a way that the market now presents me with opportunities. Unlike here, whereby you just stack positions, 50 trades, you're done. You might either be in profit or in loss. You understand? Okay, but here you are engaging the market from a standpoint of desire. It's like you are placing an order. This is what I'm trying to say. If you want to, your mobile phone, for example, can have numerous applications, but each applications have its own work to do on your phone. You get what I'm trying to say? Now, the fact that your phone has 50 applications does not mean that each applications would be engaged carelessly. You get what I'm saying? Now, if you engage your bank app carelessly, you might lose all your money. So it is still the same thing about this market. Because of you desire 50 trades, you want 50 trades does not mean you now start entering trades haphazardly. You program everything in such a way that the market at the end of the week would have given you 50 trades that you would have taken from a standpoint of you knowing what you're doing, not just because of you wish to take those 50 trades. I hope you get what I'm trying to say. So the market business model, it's like I said, it helps you know what to apply to get what you want. So there is from this low to this high, back to this low to this high, there is an explanation for it, and you can tell with precision what would happen at every single point in time. You can tell where there will be reversals, where there will be continuations, where there would be low, shallow pullbacks and heavy pullbacks. You can tell a lot of things because you have the knowledge that helps you to know all these things. So you are not working based on generic principles now. You are working based on specificity. That if you wish to know what will happen next week, there is a body of knowledge you need to engage and you will know it. If you need to know what will happen tomorrow, you can engage a body of knowledge and you're gonna know. If you need to know if this swing is a valid swing, there are things that you need to see and it will tell you if it is, if it is not. When you want to know where the price is delivering to, there are things you also need to engage that will help you know that. Okay, so it is not, unfortunately, majority of the knowledge that most traders have been exposed to have subjected them to accept things the way they are. And assume that majority of these things in this market are beyond their control. Unfortunately, it is not like that. And as much as we want to say, oh, sometimes price would, things would happen out of your control, but 90% of what happens to a trader is actually controlled by the trader. So that is the reason why this class is it's going to be an extensive class that will build you up, not just technical wise, but also in every other aspect of trading that would help you to become the complete trader that you desire to be. So this is beyond me just coming to the chart and showing you things. This is also me telling you the reasoning for these things happening. I can literally tell you that this is a bullish candle. But if I don't tell you why this bullish candle formed the way, you see, this is a bullish candle, yeah? This is also a bullish candle, and this is a bullish candle. So we have 1, 2, 3, 4 bullish candles in a row. But unfortunately, you will see that in shapes, in size, in height, in formation and everything, these 4 candles are distinct. They are different from each other. Now, that is what I'm trying to say. We all know that these are bullish candles. That is not new knowledge. We know the formations of this candle. We know the highs, low, open, high, and close. We know all these things. But then, can I explain to you the reason why these candles are formed in this way, in the ways that they are formed? Yes. Now, can I now use the formation of this candle to now generate a sensible prediction to what will happen to the next series of candles? Yes, that is what MBM is telling you. That is what it answers. That's what the market business model answers. That's what it gives you answer to. So it's beyond just pointing and saying, oh, when price comes to this place, it should do so thing. No. It is when price comes to this particular place, then it should do something, and it will do that thing not just because of it has come to that zone. No, it will do it because of there is a reason, a narration, a context behind it. So it means that, let me use an example for you. Now, before I proceed, let me say something that you would see that my teachings, I do not come to class with, I do not show you all those things that explain how do they call it now, a presentation exactly. And the reason is because number one, I'm not even comfortable that my knowledge will be caged based on something that I have come to show. You get, I have my notes here on my desk where I am reading from, of course, but then there are bullet points that can be explained extensively. And I do not wish to be limited by what is on the screen, what you are seeing there. The moment you are seeing something on the screen, it limits the scope of my teaching, and I am not that kind of person that likes to teach within a bracket. I like to speak from a standpoint of me teaching you from the heart more than me teaching you from what is on the screen. So from both my heart, my brain working together to build you up and deliver that knowledge to you. So it is your job as a trader to listen very well. That's why I try to be as audible as I can and very loud as possible, so that you do not misquote some of the things that I would be saying. Okay, so this is how our classes is going to be. Have it at the back of your mind that you will be given 100% explanation for everything, nothing left, nothing removed. Okay, so nothing left out, nothing removed also. Yeah. Now, as I was explaining to you, I was saying that the market business model would help you understand that, you see, this is a swing. You see this okay, let me talk to those who, let me speak let me just use simple terms for the sake of those of us who are not very good in analysis here. We don't even know what a swing is. Now, this is a V shape. Let me just use that. This is letter V. Yeah. Now, you see this letter V. and this letter V. Let me draw another letter V. Yeah. Now, sorry. Oh, this is not supposed to happen. Okay, yeah, good. Now, these are two letter V's. Now, the thing is that as much as we want to say that this is letter V, and since let's say on Monday a letter V was formed on the chart, and then this V prompted us to start buying. Yes, and then we bought here and price started going up. Now on Thursday, that same letter V that formed here would definitely let's imagine that it now formed again on Thursday. Now if you trade this letter V the same way you traded this one, because of their letter V's, you're gonna lose. You might lose, and that is where patterns becomes inefficient. At a point, letter V worked, but here it did not work. So what is wrong? What is wrong exactly? That's why sometimes when you are in front of the chart, you see some things that repeat themselves, but the repetition of that same thing still gives you loss. You are repeating the same thing, but you are making loss. I mean, if letter V is the reason why price should be buying, then every letter V in front of the screen should actually be buying. So why is a certain letter V buying and this one is giving me loss? Why is this one not buying? So it is beyond the patterns. It is about the understanding of the formation of the patterns, the context, everything that makes for the creation. So what the market business model does is that it removes the inefficiency of pattern and helps you build understanding, a contextual understanding for, okay, the reason why this V would buy, why you should buy this V, yeah, is because of so and so reason, this and this reasons. And then another V that now forms on Thursday, the market business model will tell you not to buy. Why? Because based on how price has reacted, buying is wrong. Yes, it is the same pattern, the same thing, but you don't follow, but the trade, the action, the narration, the context are different entirely. That's why you see bullish candle, but the way these bullish candles are, how they play out are different from each other. A very good example. Look at this bullish candle here, this particular one. You see the low here? You see how the low was, it couldn't take out this candle's low. Okay? It couldn't take out this previous candle. So this candle, this bullish candle, couldn't take out this previous candle, bullish candle low. Both of them are bullish. Both of them have the same characteristics. But is there a way I can tell that, okay, through the formation of these two candles, I can know that this next one would not clear this low? Yes, that is what the market business model comes here to teach you. Unfortunately, the same bullish candle formed here, but look at what it did. It cleared the low. The two candles, it cleared the lows. You see it here? Two lows were cleared. Hold on. Let me put it there. The two lows were cleared. They were taken out. So the issue is, if this bullish candle cannot take out this low, does it mean that the next candle will not be able to take out these two lows or any of the low? No. Are they bullish candle? Yes. Do they have low? Yes. But why is this one not taking this one out and then this one is taking this one out? So by the time you are trying to trade this candle or this next candle here, and you are anticipating that this candle here, by the time you're trying to trade this candle here, you're anticipating that it would play out the same way this one had played out, you would see that you would have taken a loss. Were you wrong? No. Price was still bullish. If you are looking for bullish moves, price was still bullish, but you are taking loss. Why? Because you are repeating pattern. You're not trading context. You're not trading reasoning. Our focus here is the reason, not the pattern. That's why yesterday when I was explaining economic fundamentals to you, I was not telling you, okay, when you see this is what will happen, or when you see that, that's what will happen. No, I was helping you build an holistic understanding of principles to the formation of every single candlesticks and every single thing that happens in the market. So it is your job as the trader to listen and follow. Okay, that's all I need you to do. Just please pay full attention and use it, to build yourself up as a trader. Now, before I go to teaching today, okay, let me just go to teachings today. Let's go to today's teaching proper. Okay, I think that's the next thing to do. So I'm just going to clear all this. Like I said, my classes are going to be, direct. So all these things are okay. So let's just go to teachings proper. Now, yesterday we stopped at the market, and today we're going to continue from there. Now, if you're a beginner trader, please just follow up. By the time we go into technical analysis, like I said, what we are doing right now is helping you build understanding, okay? Helping you build an understanding for this concept. We have not even gone into analysis. What we are doing here is teaching. It's more like saying, when in mathematics, when a topic is given, let's say the topic is algebraic equation, there will first of all be a definition for that algebraic equation before the calculation. You get what I'm trying to say? So see these videos as definition of the concept that you are here to learn. Okay, so we have not started plotting. We have not started, showing. I have not started showing. I'm just helping you understand. That's why we are doing much of talking than actually showing things on the chart. But the truth is that if you do miss this part, if you miss them, I bet you will, when you miss these things that you think are inconsequential would most likely make up for 90% of the understanding of what is to come. So if you don't understand this, how would you understand what I will be showing you in the next class? As far as I'm concerned, you don't even know what will be happening in next class. So it's your job to pay attention and listen and follow. And this is one of the reasons why I am not rushing this mentorship, and I make it a very long time, period of 6 months and all. Reason is because I do not want you people to see it as if I'm rushing. It is a tutorship. It is a coaching class. I'm showing you, I'm teaching you, I'm guiding you, I'm leading you. So you have enough time to study and rewatch and study and rewatch. We are not in a hurry. We are not in a rush. Okay? Good. Now, I said we're going to start from where we stopped yesterday. Market. Okay, so yeah. You see, this market, the explanation for this market is going to be very broad because, like I said, this is our focus. This is the focus. This is why we are here. You see, the whole talking and narration that we've been doing since, this is the reason why we are here. This market of a thing, if you do not understand how it works, how it operates, you would lose a lot. Majority of you are already good, but because you lack the foundational knowledge for these things, you keep on suffering. Now, in the market business model, what is market? Now, I'm going to be using relatable, what's it called now? Relatable analogies so that you guys will be able to follow along. Now, the market is a place where transactions take place. It's as simple as that. In the market business model, we view the market as a place where there is where transaction takes place. So the market is not limited to a location. As long as there is a transaction, then there is a market. Okay? So it could be me and a friend here, and my friend is sending me dollars, and I'm giving him naira. We are in the market right now. It means that we have done the market. We've transacted, and we have done what every other market do. I mean, if you go to the market that is based on location, it's still the same thing you're gonna do: auctioning, buying, and selling. So the word market is not a physical location. And that is why when you study the Forex market a lot, you will see that it is very, very broad. And you cannot pinpoint exactly where the whole thing is coming from. Yes, you can say, there is CME group that, takes majority of the orders and all. But what they are doing is taking orders. The question is, where are those orders coming from? Because where those orders are coming from, that is the real market. It's like a restaurant that offers, delivery. When you need to take a particular food, a particular snack or something, a meal or whatever, what you do is you log on to the app, or you try to contact the restaurant, and when you make payment, they deliver the food to you. What have you done? You have actually transacted with the restaurant, yes, and they would record it in their ledger as transaction. Yes, they might group it and say, this is, orders that were sent out, but it will be recorded as a transaction. You were in your house, yet you transacted with somebody with a restaurant that is far away from you. Similarly, you could still decide to leave your house and walk into that restaurant and still perform that same transaction, and the same amount, the same bill, repeat the same thing you did. You would have done if you had stayed at home and ordered. So what is the difference? The difference is that, yes, one was delivery, one was at the location. But what do? You have the similarity there is the transaction is our focus. That is what we are here to focus on, the transaction. Because at the end of the day, transaction means business. There is no business without transaction. There is no transaction that is out of business. So you see, this word market is not a physical location. So by the time you start using, the thing about the market business model is that it now helps me to start understanding the use of terminologies properly. Sometimes you will say things like, I bought, but the market did not go up. The market didn't go up. And then I realized that statement is actually very wrong. The correct way to say it is price did not go up, not really the market. But by the time you say the market, you're actually talking about every other thing in the world, or every other market in the world. And truthfully, all markets will not go up. And that is even wrong in contextual explanation. Price didn't go up. So the market is not a physical location. That is why, let's go back to the beginning of the explanation of foreign exchange. What does it mean? It means Forex rather. Forex means foreign exchange. I'm not even talking about currencies here. We have not gone into currencies. We're talking about market generally. So you need anything in this life, in this world. Either you are exchanging cash for something, either you are exchanging. Do you know that in the course of transactions, there are other things that are not accounted for? A very good example. If we now say, okay, the market is a physical location, yeah? Let's even assume that it is true, which is not true, because I'm explaining to you why it's not true. Now let's assume that it is true. Let's now use the you that you as a trader, you place a trade on, let's say you need dollars with your naira. Let's say you need naira and you want to buy it. Okay, so sorry, you need dollars and you have naira. Now by the time you are converting your dollar to naira, there are other things that have happened that will happen in between. Okay, the first thing, apart from the transaction of the conversion, the first thing is that for that transaction to take place, other transactions have actually happened. So transportation to where you would even change the money in the first place is actually an exchange between you and whatever mode of transportation. Okay, let's say you were going to where you make the exchange and your fuel is exhausted. You have to stop at the fuel station and fill in your gas. That is another transaction. You get? Okay? Let's say you now got to the place where you get to, and for you to have access to where you exchange your naira, you need to pay a particular commission. That is another transaction. So before the main transaction, you have done 3 different transactions. Where would those transactions be recorded in this market? So it will be a lopsided thinking, an incomplete understanding by the time you think market. The word market stands for only currencies alone. And this is the reason why you see this. Before we go to currencies, this is the reason why you see that currencies are affected by some factors like inflation, deflation, interest rates, all these things. All these things are factors of the economy that now affect the market. It is not the currency that affects you. It's like saying when there is not enough production of a certain, let's say for example, now in a country there is no enough production of food products, or food produce. What would happen in that country? There will definitely be an increase in what? In food prices. And by the time there is increase in food prices, what would happen? Much currencies would be needed to exchange for smaller or the same portion of food that you were getting before. So if you needed $10 to get 50 buckets of milk before, now you will need like $50 to get that same 50 buckets of milk. So was it the currency that changed? No, the currency did not change. Was it the currency that started the whole drama? No, it was not the currency what started the drama. It was because of the economy, the food sector of the economy. Something happened there, and then it now affected the market. So when you start to build an understanding, a knowledge, a fundamental knowledge of the reason for things, why would a country increase its interest rate? It's because of so and so reason. And these reasons is not just because of the currencies. It's far beyond the currency. The currency is just like, when you pay attention to it, money is actually a force, and people pay attention to that money more than the reason behind the money movement. Cash flow. There is something we call cash flow. I'll be teaching cash flow also in this class, in this tutorship. Cash flow is how money moves from one sector to another. But money does not just move from one sector to another because it feels like moving. No. In fact, let's talk about you as a person. When you want to eat or you are craving something, it is not because you have money that made you to buy that thing. It's because there is a craving for that thing. So the underlying narration is what matters, not really. So the currency is not yet our focus. Let's understand this market first. By the time we understand this market, it will now help us have easier understanding for currencies and every other thing. Now that I've been able to explain to you what the market is, that the market is not a physical location, it is anywhere that transaction has taken place, okay? And I've also helped you to understand that, you see, this market, the currency of a country is not moved by, it's not just a decision that someone will just wake up and say, oh, I want to increase the currency. There are reasons, underlying reasons, narration, okay, behind it, and this is the reason why when you start trading the market business model, you are not scared of news or events, because all this explanation I'm giving to you, they are already embedded in the understanding of the market business model, okay? But I need to explain them to you so that it will not look strange or foreign to you by the time you start seeing them, you start seeing me teaching you those things. I hope you get what I'm saying now. So that's the market. The market. Now, in a market, now we have understood what the market is. Now let's now go to the next question. What happens in the market? Because we cannot just understand that, okay, I mean, the market is a thing, it's an establishment. It is a structure of the economy. Remember, yeah, I forgot to tell you, the market is also a structure of the economy. Okay, yeah, we talked about it yesterday, yeah, so I didn't forget. And you can see that based on the explanation I've given to you now, when let's say the food market, now that, you know, when the food market starts having issues, will definitely have effect on other things and all those things, which I've explained. Now, you see this market, it is not just a singular, it is an establishment that accommodates several, numerous and plenty and various type of things. Okay? Now, in the market, there are, I think, based on research, there are 6 types of, market. If I'm correct. Hold on. There are different types of markets, but we are not here to study the market. We are here to learn Forex. Okay, so please pay attention. Now, you see this market, there are things that happens there, and that's what I want to say. There are things that happens in the market that you as the trader, you must be familiar with. Remember, I told you the market is a place where transaction happens, but good. That means that if I transacted cash for tomatoes, it will be recorded in the market. And somebody else transacted maybe iPhone for Samsung, it is also part of the market. Another person transacted something else. Is that now these are 3 different transactions, okay? But they are all recorded inside this market. They are not the same thing, but they are all what makes this market to function. So without transaction, there cannot be market. You get what I'm saying? So our focus now is not on different types of transaction. Our focus is on one type of transactions or one type of business in this market, and that is called the currency market. Now, this is what now brings us to the foreign exchange market. Now, I'm gonna have to delete this now. I'm sorry, I'm going to have to help you. I'm going to have to, increase this foreign exchange market. Good. Now we understand the market, and we now know that, okay, the market is where transactions happen. Now we now know that these transactions, they are of different types. But our focus is on the foreign exchange aspect of the market. Our focus is not on food market, because there is food market. There is technology market, the market for technology. There is stock market. There is volatility volatility market. There is cryptocurrency market. Our focus is the foreign exchange market. It's our focus. So let's understand we have understand market. We have understand exchange, transaction, yeah? Now, what is this foreign thing? By the time we understand these three things, it will help us build understanding for what is to come. It will not keep you confused. So the foreign exchange means, let me put it this way. When you see, unfortunately, we are because of the lack of understanding of something, we begin to complicate things for ourselves. Now, the word foreign means something that you don't know, something that is strange. Okay? It means that as long as I don't know you, yeah, you're foreign to me. As long as I don't know that thing, it is foreign to me. There are some things I would have said in the period of this teaching that this is the first time you're hearing it. That means those things are foreign to you. But because you have heard it, I've spoken it to you, there had been an exchange there. Okay? So foreign exchange now means the transaction of one thing for another thing. So you are not transacting the same thing, you are transacting different things. You are transacting water bottle for sandals. You're transacting tomatoes for pepper. You're transacting, it doesn't matter what sector. The point is that as long as it is foreign. Now, let's build understanding for this thing. And this will help you understand the difference between buyers and sellers. Okay? But then I don't want to go into buyers and sellers yet. Let's understand this. Let's go deeper into building an understanding for this thing. Let's imagine this box is for somebody who is buying, and this box is for somebody who is selling. Now, a buyer, somebody who is a buyer, let's say this person who is buying let me allocate, let me say this is for the buyer and this is for the seller. Okay, now you see, somebody who wants to buy something, let's say the person has a resource, the person must definitely have something he have to exchange. Abi? Good. That means that this buyer must have something that he must exchange. He must have something that he must exchange. Let me put it there. And I'll call that, let me call that, yeah, exchange resources, yeah, because I mean you must have a resources. Have a resource. Okay, that's it. Let me put it that way so that don't worry about my okay. That is, let me use 20. Good. Now a buyer must have something that he must give to the seller for that transaction to take place. Okay, so and that thing is the exchange resource or exchange resources. Okay, now by the time this buyer have this exchange resource, what will he go and do? The buyer will go and meet the seller. Okay, he will take this exchange resources, he will take it to the seller. This is how transaction happens. The buyer have something he wants to give to the seller, and he go and meet the seller. Now, the buyer definitely is not just going to give the seller and go empty-handed. The seller too must have something that the buyer desire. Okay, something that the buyer wants. And that thing is still the same thing. We call it exchange. It doesn't change. It's still the same thing. Exchange resource. exchange resource. Now, this thing that both of them have done, you see this thing that both of them have done? Sorry for that. What they have just done is called transaction. Just gonna put it in the middle there. It's called transaction. So both the buyer and the seller, both the buyer and seller, they engage in something called transaction. They have transacted, which means that they have already performed the same thing that are being performed in the market. But the buyer, and how did that thing happen? The buyer had something, and this thing that he had, he wants to give it to who? To the seller. The seller has something, and this thing that this seller have must be given to the buyer. So until the buyer gives, the seller cannot give. You get what I'm saying now? So everything that happened here is the market. They've just performed things. This is the market. Now, the thing here is that both the seller and the buyer are foreign to each other. They don't know each other. They don't necessarily have to know each other. Why? Because all that matters is the exchange that they are doing. Okay? So the buyer might not necessarily know who the seller is. In fact, the seller might be anywhere away. Okay? Now, this is where it becomes interesting. Whatever this buyer is exchanging to this seller, is giving to this seller, it will definitely be something that this seller does not have, abi? And this seller, whatever is giving back to the buyer, will definitely be what this buyer does not have. Which means that whatever this buyer is in turn collecting from this seller is foreign, and whatever the seller is collecting from the buyer is also foreign to the seller. So the buyer is collecting something that is foreign to them from the seller is collecting something that is foreign to them from the buyer. And what they have done there is what? An exchange. That's what we call foreign exchange. They've transacted in something that both of them are not familiar with. They don't have it. Now, if eventually this transaction continues, it is still foreign. It doesn't change. Now, it doesn't matter. They don't have to be in different countries. They might be guys who are living in the same room, and this guy have, let's say this guy has mince pie, and this one has egg roll. And this one with mince pie say, look, I'm going to trade you my egg roll for your mince pie. So the guy who is buying, who is giving out, has a resource to exchange with, which is the mince pie. And this one to have an exchange that is going to give out, which is the egg roll. So by the time he gives to this, he gives to this. So this one now does not have the egg roll again. Now he have mince pie. This one does not have mince pie again. Now he has egg roll. So if they transact again and they exchange again, they are still performing foreign exchange. Why? Because even though what is with the buyer, what is with this guy now, is something he once had. But in the present time, currently, right now, he doesn't have it. So it is foreign to him. That's what foreign exchange means. So exchange that is not, exchange that is not the same. Once the exchange resources is not the same, it becomes foreign. Okay? Now, you say this foreign exchange market now is the market that now looks at, this is the market that now looks at the exchange of difference. So the buyer has something that the seller does not have. Okay? So the buyer must exchange this thing for the seller, and the seller must exchange this thing that he have for the buyer. And now this is where the next understanding of the foreign exchange market. Now that we understand this foreign exchange market, we can now say, okay, The side of the foreign exchange market we are looking at is the currency market. So now you can call it instead of calling it foreign exchange market, now you can still call it foreign currency exchange market. Okay? Because the truth is in the forex market, there are a lot of things. I'm talking about the foundational understanding, but our focus here is the currency part, not the other, we are not looking exclusively, extensively. We're not trying to understand extensively. Since we understand that as long as whatever the first party is giving to the second party is as long as the first party is offering something to the second party that the second party does not have, then it is foreign. That is a foreign exchange. It doesn't matter who is even offering, as long as both of them, there is a difference. It's foreign exchange. When we go deeper, I will teach you guys about the fact that there is nothing that is not even foreign. There are some transactions that are considered foreign, some that are not considered foreign. But majority, in fact, 95% of the exchange in the world are actually foreign. But then that's not the teachings for today. I'm helping you understand the market. That's what I'm helping you understand here. I hope I'm not complicating anything for you. Please make sure you let me take that again. The buyer has yam. The seller has potatoes. Buyer now, that yam to the buyer is the exchange resource. He gives it to the seller. Seller has potato, so the seller now gives the potato to the buyer, because to the seller that potato is exchange resource. Okay, so in the exchange, since the seller had potato, the buyer had yam. Okay, when they now exchange, what they have done is foreign, because potato and yam are two different things. They are not the same thing. Now our focus as the foreign exchange markets now is currencies. We are not focusing on yam, potato, food, business, services, anything. We're not focusing on that. Our foreign exchange market focus, the sector or the transaction area that we are focusing on is currencies. Foreign currencies. That's what we are looking at. Our focus is currencies. That's the part we are looking at, not other thing. Now, I will now change something here and it will start making sense. Now, foreign exchange market, the currencies aspect of the foreign exchange market that we're looking at, that's where we're looking at, This explains why you can never see AUD, you can never see, like for example, this Australian dollar, US dollar, You can never trade Australian dollar as base currency and the quote currency is, US Australian dollar. It's not going to happen. The moment they are the same thing, something is wrong. That's why in the whole of the Forex market, you would never see a base and a quote currency the same. They are different. They are different from each other. Okay? They are different from each other. In the Forex market, in the foreign exchange market, the currency part that we are looking at, the Forex market means exchanging foreign items. And as long as currencies are concerned, we must place side by side two different currency. Now, currencies are countries' mode of exchange, a legal tender in every country. So that is the reason why you now see AUD, USD, EUR, USD. Euro is for a country. GBP is for a country. GBP now is British pound. There are currencies in the world, lots of currency. There is cedis, there is naira, there is sefa, there is pounds, there is euro, there is Australian dollars, there is yen, there is yuan, there are a lot of currencies. But the moment you are putting one currency against another currency, what you have done there is the currency exchange market. But for the sake of this teaching, I will just call it foreign exchange, okay? Because our focus now is the currency market. Because Australian dollar is a country's currency, US dollar is another country's currency. Now, here's the twist. If Australia and US becomes a single country, like they add their borders together and they become a single country, but Australia refused to change their currency, see, it is still considered foreign regardless the geography. So foreign exchange is not a matter of geography, it is a matter of transaction. That thing exactly. What is the mode of you see, what makes it foreign is the resources. It is the resources that makes it foreign. The moment the resources are the same, it is no more a foreign exchange. But as long as the resources are different, yeah, it is now foreign exchange. This is why now let's now change this exchange resource. Let's change it to, let's say, US dollar. US dollars, and let's change this one to British pound. Okay. So sorry for that little break. So let's change this to US dollars and this to British pound. Now, this now means that the sellers and the buyers are transacting in foreign. What makes for the foreign exchange is their exchange resource, that thing that they have to exchange. US dollar, that's the buyer has US dollar, he gives it to the seller. The buyer does not have British pound, but what he has is US dollar. So British pound is foreign to him. So the moment he gives it to the seller, of course the seller also, the US dollar is strange to the seller, to the seller. So once the seller gives the British pound to the buyer, and the buyer gives the US dollar to the seller, now British pound has gone to the buyer, it's now foreign to the seller. And US dollar has gone to the seller, it's now foreign to the buyer. That's foreign exchange. This is the reason why you would never see in the Forex market two currencies. Now, when we're talking about currencies, yeah, you never see two currencies together. This old currency. No, they will never be together. Some things that you call currencies are not even currencies. They are commodities. But they are still foreign exchange. Why? Because commodity for currency is foreign. In fact, let's use gold for example. Gold is not particular to a country. It is every country's currency. But the time you are exchanging gold for US dollar, what is that? That is foreign exchange. XAU USD. Okay, so you as the trader, when you focus on, because of there is a seller and there is a buyer, that's the reason why price is moving, you're wrong. The exchange item is what would make for the kind of focus you have to put on the market. Understanding the reason why, the reasoning, the context, is what gives you strength in this market. As we would learn going forward, you begin to see that, you see, the word currency is not really geographical based. Okay, like I said, if the if Australia and the United States decide to become one country, and Australia are still using the Australian dollar and US are still using their US dollars, the fact that despite the fact that they are both of them are the same countries now, you understand, because of they have connected their border, they are doing everything the same. But as long as this currency is not changed, it is still foreign exchange. So it is not a thing of geography, it is a thing of business transaction, the kind of market. So I help build the understanding from understanding markets first, understanding what foreign exchange market is, and then understanding the currencies, which is the foreign exchange that we are focusing on. So there are lots of foreign exchange. It's not only currency, but our focus is on which one? On the currency. Okay, now that we know what the market is, the types of markets and the kind of market we are focusing on, yeah, now we can directly link currencies as the kind of market we have under market. But let's just leave it like this. Now that we know what we are focusing on, the next thing we need to know is now how does how this stuff play out, why, the when, and other things. But I think I've exhausted up to 1 hour on this video, and I don't want it to be very, very long. Okay, so I'm just gonna have to stop here, and we'll continue in our next teaching. I just hope that this teaching is broad enough to help you understand market. Literally, this is Forex 101. And if you understand this, you can understand that majority of the things that you've been taught are literally not that they are wrong, but there is a lopsided in it, okay? Lopsidedness in it. And you see, the market business model is an holistic model, a concept that if you do not have complete the entirety of the knowledge that is required, you definitely lose and keep on losing, and you keep on blaming this concept. Meanwhile, you are the one that skipped or you did not pay attention to details. Like I said, it is complete, it is whole. As you can see, I am starting from scratch. So that if this is the first time you are learning analysis, you are not left out of the shadow, or you are not left in the shadow rather. You understand, you follow up. This is elementary understanding. Your job is to follow. Listen and follow. So in our next class, I will be explaining and teaching more. So you can follow me on Twitter actually if you want to know because I'm trying to see if there's a way we can do it here on YouTube. And if there is, definitely I would be dropping the topics for next week, for our next class early, so that you can know what to anticipate. But for now, I've been dropping it on Twitter, so you can actually follow me on Twitter and get the knowledge there. Okay, so a quick recap. This market is a place where transaction, as long as it's not even a place, it is transaction. The word market means transaction, which means there is no transaction without the market cannot exist when there is no transaction. Okay, so it is not a physical place. Okay, what validates it is the transaction, and I've explained that. And then I also explained foreign exchange as the transaction of things that are strange between two or more parties. Okay, and then the foreign exchange market is the market or the transaction of two foreign exchange things, and I use the explanation of sellers and buyers. And then Anna told us that what we are focusing on in this market, this foreign exchange market, there are a lot of things that are exchanged. You can exchange furniture for wool, exchange gold for diamond. But what we were looking at is the currencies. Okay, and that's when I was like, okay, now the US dollar is the first currency that the buyer is exchanging for the seller. The seller is giving the buyer British pound. So both of them are exchanging in, they are engaging in foreign exchange. Now, the kind of foreign exchange that we do is countries exchange. That's the reason why you see that, well, in our next teachings, we'll also talk about why is it that it is countries and not just other things, number one. Then we'll explain how we can understand, how we will not have to go back to understanding government and all those things, because the country of the system or the currencies of a country is being run by the government. Okay, you understand? Now we'll now have to tail everything down to understanding how they work hand in hand with the central bank, and then we will now understand the currencies, and then we'll now build knowledge for currencies of each country, and then from there we'll now start understanding what is base and quote currency, how all these things works together, and then from there we'll now move on to how buying and selling of currencies takes place, and that the process, which is the bidding and the asking, and also the auctioning. That will now keep on moving and little by little we begin to build understanding, and at a point we'll now start going into the chart to show you how these currencies, how this market can be traded effectively with the understanding of all these things. But before then, I wish you the best, guys. Enjoy the rest of your night.